high dividend stocks in Bursa Malaysia for 2024. 2 high dividend stocks a week invites passive income inside, sends active income away. These stable dividend stocks are currently giving 5% or more just for dividend returns. DataSonic, at the current price, dividend yield for the past 4 quarters close to 5.5%. DataSonic's categorized in Bursa M'sia Technology sector provides ICT solutions, specifically smart cards, such as your chips embedded in your Malaysian MyKad or passports. Others including credit, debit or bank cards as well. For the past 1 year, its stock price has been relatively flat. However, it may change for the worse in the future. So if you want to stay up to date, do follow and subscribe. If you prefer weekly email updates, there's a link in the description below or in bio. Now, how likely is this dividend payout can be sustained or even go higher in the future? For that, we look at the percentage net profit margin past 4 quarters by dividing the net profit with revenue. In this case, 76 divided by 344 million, that is around 22%. Also, we want to analyze net profit growth. Looks like it has grown 660% compared to the year before, from 10 million to 76 million, and in fact far exceeded its net profit around 60-ish million before the pandemic. A disclaimer, this is not investment advice and does not constitute a recommendation to buy the dividend stocks cover, as I do not know your financial needs, circumstances, risk appetite and investment objectives. Then next, we want to look at these stocks dividend risk to you, whether it has too much debt that can make it vulnerable to sudden negative changes in business and economic conditions. For this, we look at net debt, which is borrowings minus whatever fixed deposit or cash balances that it has, ideally zero or negative. For DataSonic, it is in a net cash position for the past 2 years. ELK Desa Resources at the current price, dividend yield for the past 4 quarters is at 6+%. ELK Desa Resources categorized in Bursa Malaysia financial services sector, offering higher purchase financing or car loans for used motor vehicle, targeting specifically buyers who are seeking small value financing for their cars. This is a market segment that remains underserved by financial institutions and banks. Now, it also sells general insurance policy as insurance agent, and also does trading of used motor vehicles and trading and wholesaling of home furniture. For the past 1 year, its stock price has been trending up from 80-ish cents to 1 ringgit and 20 ringgit range. So how likely is this high dividend payout can be sustained or even higher going forward? For that, we look at its net margin past 4 quarters, dividing the net profit with revenue. In this case, 47.7 divided by 155 million, and that is around 30%. Now next, we want to look at its net profit growth. Looks like it has grown 85% compared to the year before, 25.7 million to 47.7 million, and in fact far exceeded its net profit about 30-ish million before the pandemic. As usual, the next thing to do is to look at this stock's dividend risk to you. Now for this, we look at the company's leverage and shows the extent to which the operations are funded by the lenders versus shareholders, right? Financial term for this is gearing ratio. High gearing generally implies that a company may be vulnerable to sudden negative changes in business and economic conditions. So you have your gearing, which is your total debt minus any cash, and you're divided by the shareholder funds. For ELK Desa Resources, it remains low at 0.42 times. Of course, this may improve or worsen in the future. So if you want to be aware of future changes, do follow and subscribe. If you prefer weekly email updates, there's a link in the description or in bio. Questions, ask below, and this is your next high dividend stocks video to watch. Also check out more of these global investment strategy videos updated monthly only for CF Liu channel insider members.